Wow, people were shocked about this one. This morning, we got a stunning quarter and a huge debt reduction from none other than Carvana, the web-based used car retailer best known for its automated car vending machines. Gigantic soda machine look like garages that dispense what you buy. Now, Carvana already had a monster move, but it's heavily shorted, so I always hesitate to recommend it because you can never tell how much of these gains are because of a short squeeze. That's definitely part of the reason the stock could surge 40% today. But man, I did not expect the news to be this good, and it is good. Carvana beat the numbers on every key line with much higher than expected sales, record gross profit per unit, and the positive EBITDA number since it's been since 2021. More important, the shorts have been ganging up on this one because they thought it's got an ugly balance sheet. But today they announced a major debt restructuring. And it, coupled with an at-the-market stock offering, Carvana will be able to lower its interest expense by a staggering $430 million over the next 2 years. That's huge. Company now has a lot of breathing room, and some of its worst possible outcomes, I think, are off the table, which is why the shorts had to scramble, and a lot of new people came into the stock. So let's take a closer look with Ernie Garcia. He's Ernie Garcia the third, I should say. He's the co-founder and chairman CEO of Carvana. Find out more. Hey, Mr. Garcia, welcome back to Mad Money.
Hey, Jim, thanks for having us.
You know, Ernie, there's a really interesting pivot that you did. I think a lot of people recognize this is one of the great comeback stories of all time. But I think what they may not realize is you kind of got religion about what everybody was saying, which is it's not just good to grow 100% every year. It's time to make money. And you did it, and people think you couldn't do it. I'm giving you the floor to tell you how did you do it?
Well, first of all, thank you. We appreciate the characterization as greatest comeback of all time. We'll take that all day long. But I think it's been a journey for sure, Jim. I think, for 8 years, we grew at about 100% per year. And, things seemed to come pretty easy to us. I promise if you were there, it was hard along the way then, too. But it sure looked from the outside like things were coming easy. And then I think 22 came and we were positioned for another huge year of growth, and car prices went up and interest rates went up and it got more expensive for our customers. And we were overextended and we had a lot of work to do to catch back up. I think in Q1 of last year, we had negative $360 million of EBITDA, which is not a good number. But in the last 15 months, we've been able to turn that around. We had 155 million positive this quarter. And that only happened because our customers love our model. And very importantly, a ton of people inside Carvana did a ton of amazing work over the last year and a half. And we've made a lot of progress. And so we couldn't be more grateful. We're excited to be coming back. And I think we got a lot more comeback in us.
All right, tell me why you think this is sustainable. A lot of the people who are betting against you say this was one time only. It's going to go back to its old ways.
Sure. Well, I think, what makes something sustainable is the fundamentals. And the fundamentals are that, customers love buying cars online. They love having a big selection. They love saving money. They love a process that's simple. And we have great people that care, that are working really hard to build the best business model we can to provide that for our customers. And I think, over the last 15 months, we've made so much progress. Over the last 6 months, we've made even more. And we plan to continue to do that from here. So I think the gains that you're seeing are sustainable. We definitely benefited this quarter from a couple things that broke our way. But there were huge gains underneath it that are certainly sustainable and that will continue.
I know it is a little difficult for the layman to understand, but this debt restructuring was rather monumental. Can you, I don't want you to do it in a debt for dummies kind of thing, but can you explain what happened here? Because it was a very stark contrast to a lot of other debt deals that I've seen.
Sure. Well, the first thing I'll do is I'll give some credit to our lenders that we worked with. I think they came in looking to work with us to find a solution. They recognized the progress that was happening in the business, and they saw there was an opportunity to do something positive for both of us. And I think we were able to find that together. And I think that was the key that I think made this a bit easier, was just the progress in the business. But I think what underlied it is we did raise debt over the last several years to fund all of our growth and all of the infrastructure build out that has enabled us to build this company. And we chose at the time to not use our security, to not use collateral to underlie that debt, and that gave us an asset here that we were able to use at this time that's been really valuable for us, and made a great trade for everyone. So I think that was pretty exciting.
Now, I know that this is not of your doing, but I do think that you're the most successful at recognizing that a squeeze, a monumental squeeze, can actually be good for a company. It allowed you to be able to do this gigantic equity offering, although it's at the money, but it also kind of sustained you. The people who bet against you, in a way, Ernie, made it so that you could win.
Well, I think we're going to try to stay as focused on the fundamentals we can. We're going to try to just keep pushing the business forward. I think there certainly has been some naysayers out there over the last year, and that's, I think, just kind of the rules of the road. I think that's just kind of how it goes. And so they can be out there, they can have their views. That's gonna motivate us and push us forward. And again, I just thank the people inside Carvana for not letting that distract us.
Now, the car I bought from Carvana was a very low price car, $24,000. And it made me think, how the heck can they make money at that? I know CarMax makes good money on the low price ones. Can you ever make good money in the low price ones given how much debt you have per car, so to speak?
Sure. I think, I think in general, we would prefer for car prices to be lower. I think it's better for our customers. I think that, we had some of our most successful years when car prices were much lower. So we would love for car prices to go lower. I think, we're seeing some depreciation in the market today. The last couple of years have been characterized much more by car prices going up than going down. But I think we're well positioned to ride through any market and to just keep delivering great experience to our customers.
Do you have enough inventory for people? You're down a lot from where you were.
Sure. So we have about 50,000 cars that we own. And if a customer comes to our website, they'll see tens of thousands of cars they can pick from. So I think that's one of the big advantages of Carvana. We have a huge selection for customers to pick from. We can deliver them to customers. We've always said as soon as next day, but more recently, we've actually been testing same day. Our fastest delivery was recently done in 2 hours from a customer who jumped on our website. So we're always trying to push there. And I think we're making a ton of progress and giving customers broad selection.
Last thing I need to know, 35 million shares. Obviously, if you just lay it out there, this is at the money, you could really hurt investors who came in today. Are you going to be able to be gentle, so to speak, about the stock that you're offering? I know that GameStop, for instance, was able to do at the money. No one ever even knew it. Do you think this will be done subtly and nothing that would make it so that you would wake up one day and say, man, they're laying all over the stock?
Sure. So I think you're referencing the entire size of the ATM, which is
Correct.
Obviously a bit of a complicated transaction, but I'll assume that everyone follows. And what I would say is, we have decided to raise $350 million, which will require a relatively small subset of that ATM overall. And then beyond that, that's an asset for the company. It gives us option value, and so we'll evaluate it over time.
Well, okay, I got to tell you, congratulations. Great turn. A lot of people bet against you, Ernie. It seems like right now it was a sucker's bet to bet against you. Congratulations.
Oh, well, thank you so much, Jim. We appreciate it.
Very deserving. That is Ernie Garcia III, and the stock is Carvana. The stock was at 3 in December. This is what's so great about our stock market, and congratulations. Good to see you.
Thanks. See you soon.
Mad Money's back there.
Coming up, is a life of plastic about to make this stock fantastic once again? Recently in the red, Mattel is thinking pink. Next.